Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 6th of September, 2019. We had a good week for equities. Once again, semiconductors leading the way, and a relative underperformer is the Russell 2000. Let's take a look at the charts here because we've got solid performance again this week. The market finally made it out of that range that it had been in and beyond, back up above these prior peaks. So that now is what we're going to be looking for as the potential for support on pullbacks. What we'd like to see is we're going to give the benefit of the doubt to the buyers in the S&P 500 as long as we remain above probably 293-ish. I think you want to give it a little bit of room down into that range. But for now, it's very impressive that we were able to break out beyond that range. We had the higher lows going into it. If you recall in last week's video, I had sketched in what I was hoping would be a scenario, which was to pull back down towards the 5-day moving average and then build for a potential break of this range. That's exactly what happened. Unfortunately, I didn't trade it exactly that way. Sometimes often it's a lot easier to see what the market's going to do than it is to trade it. But for now, we continue to give the benefit of the doubt to the buyers. We're above a rising 5-day moving average. Certainly some consolidation, pullback down towards that level would not be a surprise, and it would actually be healthy. So again, buyers are in control. We don't need to overstate that. Same is true for the NASDAQ, the Russell 2000, as I mentioned. Once again, the weaker group. You can see that we did break the pattern of lower highs and lower lows. So that makes it a little bit more neutral. But we came right up to that 200-day moving average and the volume weighted average price from the December low. And that's where we're finding supply. That's, of course, also got the declining 50-day moving average as well. On a shorter term time frame, we are above a rising 5-day moving average. So again, we have mixed messages here, but the larger time frame takes precedence here, and that tells us just move to a different market. It's not worth trying to fight indecisive trends like we see in the Russell 2000, whereas the semiconductors clearly broke beyond that upsloping range that they had been in, and we are clearly broken higher again. Now if we're to pull back, 116, 116 and a half is where we'd like to see support found. The biotechs are again the weaker group, and they came down pretty much to that 100 level that we had been talking about. And as I mentioned to subscribers, I kind of think that the worst is probably over for the the biotechs here. But if we could see further bounce up into here, but it would still only be a bounce within a longer term downtrend with that declining 200-day moving average. So I just don't see a reason to be involved in the biotech index, at least. There's of course always going to be individual stocks in any group that go against the grain, but as far as the sectors go, financials also, they closed right above that 50-day moving average. That is a good thing to see. We made up a lot of ground in all of these markets. Now if we pull back down towards 27, that wouldn't be a surprise, and it wouldn't be a bad thing either. So for now, intermediate term, we're a little bit stretched here to the upside, but we still have opportunities as far as pullbacks. Last week I had spoken about ATVI on what am I trying to say, Yahoo Finance. That was right over in here. That had a nice week, up 10% or so from there. A couple other names to keep an eye on. This week I had spoken about CSIQ. That is on Thursday. I said you could basically buy it in this range here, which was 23. Stop going below the 22 level. I think that this CSIQ, it's a solar company. It trades 8 million shares a day. It's holding above this prior resistance, so giving it down to 22 or so for a more intermediate term perspective in terms of maybe a month or so hold. I think that is a good idea. You got to be impressed with stocks like Google as well. Google here is breaking out of its range, and if you look at the volume weighted average price from this gap lower, or even just took it from the peak, you can see we're holding above that. We're above a 20 and 50-day moving average. This week, of course, we broke the high end of that range and we're holding on to it. So I think that, Google is one to keep an eye on. It might pull back a little bit first, do something like this, and then be able to come back up and break higher some point next week. If that were the case, I would set a stop. Let's say this scenario happened. It's certainly not a prediction, just a potential scenario. Then I would put a stop underneath that higher low. But Google looks like it should be heading up maybe towards towards those all-time highs. I'd also keep an eye on, well, I'd mentioned this on Twitter. If you don't follow me on Twitter, it's at Alpha Trends. I had mentioned it Wednesday night. Thursday, we had movement here, and it followed through today. So that stock being up 4%. I've also recently mentioned Tesla, that I think that, you know, for the first time, this isn't a first think, there is something that I think, this is a fact, that you know, the volume weighted average price since the IPO is now drifting lower. The year-to-date volume weighted average price, the 10, 20, 30, 40 week moving average are all declining. And Tesla, I would be highly suspicious of, especially, you know, when we're looking at it being stuck below that 50-day moving average. On one slightly positive note, it did close this week above the volume weighted average price from that June low. So I think that, you know, it's going to have to get down probably below 218-ish to really get some downward momentum. And if it does happen, then to me, it looks like Tesla ought to probably be headed back for another test of this trend line, and that might not go so well next time. So I think there's a lot of risk in a stock like Tesla in this market. I'd also mention Sirius Satellite, SIRI. I was surprised to find this one last week, and I was looking through MarketSmith charts as far as this being a nice, looking like it's getting ready to trend once again. It had a nice move 2016, 17, and halfway into last year before getting hit. But we are back above the volume weighted average price from that peak. You can see that's a positive thing. Going over to the daily time frame, we're above a rising 20, 50, and 200-day moving average. I happen to be long some in here, and I think, you know, for me as a swing trader, my stop is under here. It's at 608. If you were looking to hold this for a longer term horizon, probably stop goes underneath the low of the last month in here. That also gives you protection against that rising 50-day moving average. By the way, on Sunday at 6 p.m. Eastern, I'm doing a webinar with my friends at TrendSpider talking about the volume weighted average price. They've got a great deal for a 2-week trial on that as well. So hope to see you there. Sign up links are in the email, or also at alphatrends.net. Thanks, and have a good weekend.